All right, well, here I am once again, folks. Angelo Lambropoulos, Director of Lambros Realty, with the May 2022 Cherrybrook property market update. So there's a bit to get through. I'll get straight into it. Now, as for the registered home sales for May 2022, there were 5 in the suburbs. So as you know, I'm just talking solely on homes, not talking duplexes, townhouses, anything like that, to keep it as accurate as possible. The median amongst those sales was sitting at 2,350,000. The highest sale recorded was 2,875,000, with the average days on market sitting at 27. Now, if we look at the comparative month last year, May 2021, there were 23 registered home sales. So yeah, quite a significant amount more. The median was 1,965,000. The highest sale price recorded amongst those 23 sales was 2,538,000, and average days on market was sitting at 22. So things were moving a lot quicker, as you could see, and a high volume. So when we look at the summarizing that, we're Cherrybrook's 4 home sales down in comparison to April 2020. So there were 9 in April, 5 this month, and a whopping 18 sales down from May 2021. So the median home price in Cherrybrook, it's 19.6% up from May 2021. And in comparison to last month, it's still sitting at that 2.35. So nothing remains, it's unchanged there. Now, the average days on market currently sits at 27 compared to 28 last month. So again, not much of a movement there. So I think it's fair to say that the dust has somewhat settled, and there's a bit of clarity of what's happening in and around the joint at the moment, which I'll get to later on. Now let's get to the auction results, shall we? This is an interesting one. So there were 17 registered auctions for May. Of those 17 registered auctions, 2 had sold at auction, 2 had sold prior, and 13 had either passed in or withdrawn from auction, meaning agents obviously knew that the auction was going to be a non-event, so decided not to take it to auction, which was a sensible move. So when you look at the auction clearance rates as a whole, 11.8% for the month of May, and 23.5% if you're including those that had sold prior. So what had sold at auction and what had sold prior, totaling 4. So the auction clearance rates are down 1.2% from April 2022, which was bad enough, and then 3.5% down, including those that had sold prior. So there you go. So there was a total of 13 homes that had passed in at auction for the month of May. And this is compared to, so the additional 2 more homes had passed in comparison to April, which was sitting at 11. And just to reiterate again, when you're looking at how's their 5 registered sales and in comparison, again, when I'm talking auction results, I'm including in this case the duplexes, townhouses, houses, everything that's actually gone to auction. So looking at it as a whole figure to get the auction clearance rates. As far as properties listed for sale at the moment on the public portal, so as of the 2nd of June 2022, the date of this recording, there are 20 homes currently listed for sale. In comparison to when I did the recording for last month, for the April 2022 update, there were 25 homes listed for sale. My apologies. And that was on the 4th of May 2022, so a month ago. So not much has changed in the shape of, it's still remaining relatively stable, pardon me, between that 25 to 30 mark. So I guess let's get down to the nitty gritty. So what does all this data mean? Okay, so how do we put this data, now that I think the dust has settled, in my gut feeling, my opinion, by no means nobody hold me to this, it's solely an opinion, but, based on my experience in the area and, understanding these markets and pretty good idea of the suburb, I think this is where we sit at the moment, and I think enough of a picture's been painted. I know you're not meant to look at things on a month-to-month basis, but there's been sort of around 6 to 7 months of the corrective cycle, and I think be fair to say the dust has settled and people know where things sit at the moment. So let's get to it. So what does it mean in plain English, and how do we interpret this data? Okay, so I'll explain the mechanics that are presently at play here. So it's very easy to look at the auction clearance rates and go, wow, Cherrybrook's in trouble, everything's passing in, what's going on? It's going to correct furthermore. Now, the passing in of isn't necessarily a bad thing, right? So I'll lay the positive here. The positive is, and what this is showing, if I can revert your attention, if you haven't seen the April 2022 property market update, don't worry so much about the statistics because I've sort of outlined the comparisons. But if you watch the back half, I'm not sure, what stage in the video, but if you just fast forward, I spoke about how the low mortgage stress in the suburb really was the silver lining, and this is where we're starting to see it at play here, right? So go watch that. I'm not going to repeat myself on that. I did it last video. So let's begin with the auction clearance rates, shall we? When it comes to the auction clearance rates, well, what this is clearly showing us is there's a big disconnect between what buyers are willing to pay, if they're registering and bidding at all, in proportion, in accordance to what a seller's willing to sell for. Now, whilst the market, with lending, and I'm hearing a lot of buyers saying, look, the banks are only letting us lend so much, they're really strict at the moment. Okay, that may be so. But with all due respect, your circumstance isn't the seller's circumstance, and vice versa. So as a homeowner, if you're $200,000 from where you need to be to make that move feasible, if it's not viable, you're not going to sell, right? So what you're seeing is a lot of these auctions passing in as a result. Now, a suburb that has high mortgage stress and really you take what you get because you're in financial hardship, you'll take it. And then you'll start to see your 15, 20% corrections, okay? Now, what this is clearly showing me is, and as is the case with the data, there is no pressure to sell. Otherwise, you would be selling. Now, following on from that, the rising interest rates and inflation. Now, there's a lot of talk, and with the rising interest rates and inflation, people are going to be under pressure and need to sell, and it's going to put downward pressure on the property prices, so we'll be able to buy at a better rate, blah, blah. Now, there's no doubt inflation is in play. There's no doubt there'll likely be another interest rate increase next Tuesday as part of the RBA meeting. But again, the thing to remember is Cherrybrook is predominantly a baby boomer suburb, with at least 40% of the suburb having paid off their mortgage. So there really is no hardship, or that they own the house, they own. So, and the other thing to take into consideration here is throughout the course of COVID, a lot of people with a lot of the stimulus packages that were being put into play here, had put people in a cash positive environment. So a lot of them are sitting with a lot of cash anyway. So this is where there's a lot more at play than just interest rates and inflation. Don't get me wrong, there will be suburbs out there that will suffer, unfortunately, as a result. But it's laws of physics. What goes up must come down, and vice versa. However, in this scenario here, I don't think you'll see much of a, when we talk rising interest rates, we're still at a very low rate of interest anyway. Now, in proportion to property values, I know you're going to say, well, hold on, we're now talking an average of 2.35 versus, what was once 1.5. But at the same token, as I said before, there's no real mortgage stress. So this is where it's all proportionate, and you've got to look at things on a scalability, ratio. The other thing I've also noticed as well is that there are homes that are withdrawing from sale, which again stands true to the low mortgage stress example, where we'll withdraw, we can't sell, we're not getting the price we want. We may try with another agent. If we get the price we want, we'll take it. And don't get me wrong, there are those that need to sell, and there will be the lucky buyer amongst the bunch that will snag a bargain. I mean, that happens everywhere. But as far as the vast majority is concerned, it's, in my opinion, you're not going to see it, right? So I think what you'll see now is very similar to what happened back in the late half of 2017, early half of 2019, through that, and that 2018 period, through that period there, where those that were selling in Cherrybrook, the majority were using it to to upgrade their home or change lifestyle or do something. It wasn't a case of, needing to sell. They just wanted to. They wanted to move. They wanted to. So they were looking at their changeover price. So that's where a lot of these moves will come from. If the sale price doesn't work for them and it's not financially viable for them to move and go to the next phase of their life or do what they need to do, they'll just wait for the next for the market to pick up again, which nobody's got a crystal ball, nobody knows. But when that does happen, they'll get ready for that. And then so the other point, I was just looking at my notes here. The other point I wanted to make on that is homeowners are happy to sit and wait. So that stands true when you look at, if you've been looking as a buyer and what's sitting on the market at the moment, you'll notice that, days on market for, a lot of these homes have crept up and not much has happened in the shape of price change. And again, it's a case of, well, if we don't get the price we want, we'll just sit and wait. Or I think inevitably after a while, they may withdraw and go, you know what, we'll just, we won't sell, right? So and this also stands true when you look at the low stock levels emerging in the marketplace. It's now hit a point where it was sort of a 4-to-1 ratio where, for every 4 listings, it'd be 1 that would sell. Now it's hit a point where, all right, well, you may get 1 or 2 sales a week. But in amongst those 1 to 2 sales a week, nothing really new. It's stocks moving slow. So it's sort of hitting that 1-to-1, 2-to-1 ratio, which is bridging that stock level pressure. So I guess, so looking at all that, that's all in line with the silver lining I was talking about, the low mortgage stress. So my advice to home buyers would be, and I know you're probably looking at this going, well, of course you're going to say this has got a vested interest, but there's 2 takes on this, right? Now, this is just my opinion. If you're a home buyer, I would be looking at emerging or, entering the marketplace now. There's no competition. There's very few buyers looking. You yourself are looking and going to these open homes and going, well, there's not much happening here, right? You're seeing it for yourself. Auctions are passing in. You yourself may be the only bidder. You're sort of sitting back because you out of fear of paying too much. Now, this is where, talking to a lot of buyers, the notion of sitting back and waiting for the market to further correct. Absolutely. Let's assume it doesn't. It probably will, right? A market further correcting doesn't mean a seller has to sell. So, if what was once 2.5 million, you're hoping to get for 2 million, you've got to ask yourself and be realistic. Would a seller sell for 2 million and where would they go? And if they're asking 2.5, are they really going to drop to 2? So this is the other thing, when just going back on what I said before, those are withdrawing from sale because there's such a strong rental demand. On average, the rentals here in Cherrybrook, if you look at from this year to last year, on average, it's gone up 8 to 13%, right? So rental increase. So there's your average 4-bedroom in Cherrybrook now, which was once getting sort of 900 a week, is up there to 1,000 plus a week, right? And when you look at your mortgage that's been paid off and you go, you can service that, you're going to hold on to it and wait for the capital growth to appreciate on the other end when the market picks up. So there are other options that a lot of the residents do have here. As I said, due to the low mortgage stress, it all hinges around that. So if the only word of warning, I don't have a crystal ball, I don't know what's going to happen, but one thing that does stand true, people want what they can't have. So if it does hit a point where it's like, wow, I can now jump and buy this, it's a bargain, what do you think the next person's going to think? And the next person, before you know it, you've got 20 people bidding at an auction and you've now got a booming Cherrybrook property market again. So this is where I think timing is key. If you can afford to get in and do it while the competition's not there. Because, I have seen it happen before where there's been markets that are corrected and I've had so many buyers come to me and say, you know what, Angelo, we should have listened. We should have just bought then. And don't take my word for it. Look at all the historical data, look at what properties we're selling for, and then look at the extra 40% they've gained in just that 3 to 4 year period, and not even, right? And I'm not saying that same gain will happen again, but when you're buying a property, it's a long-term investment. So you need to look at it as that when it's a family home. So, if you look at the annual average of growth in Cherrybrook, which has been roughly 11 to 12% year on year, you've got to ask yourself that, all right, well, property market corrects, where's it going to sit in 20 years time? And I think, that's what you've got to be asking yourself. If Cherrybrook's a suburb, you see yourself growing up with your family, you can afford the repayments now, do you risk waiting for the market to further correct in a suburb that, let's be honest, realistically is probably not going to hit that price you want it to correct to? It could, but power of probability is stacked against you. So this is where, food for thought. If you're a seller, obviously, I guess this goes without saying, you're not going to sell unless you need to sell, and you know that already, hence the reason a lot of you aren't putting your home to market. If you need to sell or want to sell and it comes down to changeover price, then you will do it, but you're not going to flood the stock and put downward pressure on prices and likely not sell because you're not getting the price you want anyway. So it works both ways. So I hope that I went into a bit of detail there. So I hope that makes sense. If you have any further questions or would like to discuss anything I've just mentioned here, you're welcome to call me. Details are up there, so I won't repeat them. Thank you very much for watching, and I look forward to updating you next month and to see how things are tracking. It'll be interesting. Okay, bye now.